Welcome back, everybody. Commercial real estate firm CBRE just out with better than expected earnings a share, with revenue essentially in line. The stock is up nearly 13% this year. Bob Sulentic is the president and CEO of CBRE. And Bob, thanks for coming in today.
Thank you, Becky.
So it looks like business was up across the board in just about every region and every business line.
Business was up well around the world. The particularly strong area of our business was here in the U.S., where we saw revenues up 20%. Europe and Asia were under a little bit of pressure because of the strength of the dollar. Both of them impacted about 10% by the strength of the dollar, but good growth around the world in all of our product lines.
Overall, though, how does the dollar weigh out? I know that it puts pressure on the revenue that you're bringing back from Asia and Europe, but at the same time, I saw that there were 2 cents of gains in the quarter because of dollar, and was it hedging activity?
Yeah, we had hedges in place, and we got a couple cents of gains from the hedges, but our revenue was pushed down. The growth in our revenue was impacted to the tune of about 5% because of the dollar around the world. 10% in Europe, 10% in Asia, of course, not here in the U.S.
How do you deal with that on an ongoing basis? Because nobody's expecting the dollar to really get much weaker from here.
Well, we have hedges in place. Now, I will say in this environment, our biggest business, our strongest business is here in the U.S., so of course that provides with a natural hedge. But in general, we try to make sure we have hedges that are in the right places around the world.
Here in the United States, the demand is really for what? For office buildings, for hotels?
Demand for everything. Multifamily, very strong. Office buildings, very strong. Industrial, particularly strong, given what's going on in the dot-com arena and the fact that these dot-com distributors want big distribution centers around the urban core in the U.S.
Oh, wait, so that we're not just talking Silicon Valley. You're talking about strength everywhere because of the dot-com.
Well, Silicon Valley is incredibly strong, but the whole U.S., the big cities around the U.S. are strong in terms of leasing. They're strong in terms of capital flow for investment sales, so strong commercial real estate market. It
looks like there is still demand that's coming from overseas for properties here in the United States, too. You saw a strong demand from Asian buyers here in the United States?
Asian buyers are very interested in investing their capital here in the U.S., and the reason is they view this as one of the strong growth economies on an extended basis. Fundamentals are very strong for U.S. real estate. Occupancies are going up, rental rates are going up. Not a lot of new supply coming on, so there's a lot of capital that wants to be here.
What is it that you worry about? If the Fed raises rates, does that change the picture?
I think that's baked into the assumptions about the prices of real estate. What we worry about is lack of supply. What we worry about, of course, is the global economy, the still choppy economy in Europe, the fact that growth has slowed down a little bit in China and other parts of Asia. Those are the things that put pressure on, but in general, a lot of enthusiasm for investing in commercial real estate.
Let's talk about what's happening in Europe, because we certainly seem to hear from people all the time that that looks like a better market in terms of the stocks, in terms of the potential for properties that can be bought than even here in the United States. Would you agree with that?
Well, Europe has gotten better. Yeah. It's certainly gotten better in the last 2 years, but it's growing very slowly and it's very uneven. The UK in our business, the UK and London in particular has been a very strong market. London has been the top property market in the world for the last few years in terms of inbound capital. We see that continuing, but you know, there's choppiness around Europe and slow growth, and the slow growth is projected to continue there.
Okay. Bob, thank you so much for joining us today. We appreciate your time.
Thank you.